Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway.
Hi, welcome to another edition of Master of the Markets. I'm Barry Habib of MBS Highway. This is exclusively created for Mortgage News Network. Hey, crazy week last week, but we hit the targets on the button. Said 202 on the 10-year, hit exactly 202. Said 1980 on the S&P, and it would bounce off of there, and if it does, the low rate opportunity would be fleeting, and we should take advantage of it. Keep your eye on the ball. Man, we hit the nail right on the head. I'm going to show you the charts. What happened to drive this last week? The Fed. Janet Yellen playing with words here. They took out considerable time before they hike rates, and they said patience before they hike rates. What's the definition? Well, considerable time had a 6-month target. Patience has more of a 3-month target, 2 Fed meetings, which is about 3 months. So, as crazy as it sounds, I guess the stock market was at least happy that the Fed was not going to really open the door to rate hikes that would have at least 2 meetings for 3 months worth of warning. Kind of shows the Fed's backed off. Listen, I don't think the Fed's going to hike rates at all in 2015. I know I was kind of the lone wolf on this one. Said this early on, not going to hike rates till maybe 2016. Everybody thought we were crazy. Now, more and more and more people are jumping on that bandwagon. So I think rates are going to remain low for a while. Thing of it is, though, as well, the Fed might remain low. You could see mortgage rates vacillate and jump around. The low rate opportunity that we had last week was something that we wanted to really grab onto. Okay, so rates bounced up. Where do we go from here? We'll talk about it in a minute when we look at the charts. First off, oil markets, oil kind of stabilized. That also helps stocks. We talked about that in depth last week and how influential this has been on the markets. Now, the media really is pretty darn clueless to it. And unfortunately, our Treasury Secretary, Jackie Liu, no clue whatsoever, not understanding any contagion. During the week, we saw the Russian ruble lose its mind, essentially, as far as being devalued. And this is what happens when you have destabilization in one market. They're all interconnected. The fact that our Treasury Secretary is completely clueless to this fact, either that or is just trying to jawbone and say things to keep things calm. It's really a shame that he does not have the experience nor the understanding of the financial markets. And this is our Treasury Secretary. Anyway, housing news also. Housing starts a little bit softer. Not crazy because the previous month's number was revised. So still slow and steady as she goes. And let's not forget, even if you saw 3% appreciation, somebody puts 10% down on a home, on their investment in that home, they're still getting a 30% return. So it can be very powerful even at a low rate of appreciation. But we are right now at a level of about 5% appreciation. Maybe that slows down into years to come, but we still see it slow and steady, not getting ahead of itself. I know the media will kill this concept of not being robust and crazy, but the bottom line is this is good because this is sustainable. You don't want it to be so crazy that it creates bubble conditions. In either case, we feel that the housing market, as it stands right now, certainly things can change, does look to be reasonable going forward, especially when you consider rental costs are continuing to escalate. All right. In the week ahead, kind of a slow week because we do have the Christmas holiday, of course. So that means that there could be some wild swings, so we have to watch out for that. We will get some housing data to look at, and that's always going to be important. We'll report that back to you next week. But better yet, why don't you just get a free trial to MBS Highway and become a member? I mean, what the heck? You're crazy if you don't. You get this information every day, and last week's opportunity, you would not have missed it. If you're sitting there right now, you say, oh my goodness, what happened? In 2 days, rates jumped higher, pricing got worse. Where were you? Well, if you would have been on MBS Highway, you would have been locked, your customers would have been locked, you would have known ahead of time what to do and when to lock in. So don't make the mistake again. Get on board. It's free. And if you decide to become a member, the cost is so inexpensive. I mean, really? We're in a big money business here. You need to think about it. Let's look at the charts. Here's where we are. I want to take a look at that 10-year Treasury note because this is amazing. Okay, so here's where we were last week. Play last week's video. I said we're at 208. It's going to go to 202. Where'd it go? 202. I said the opportunity would be fleeting, and it was. Also told you that in the stock market, the S&P, 1980 was the level that we looked at, and we said this would all correspond with hitting that 1980 and then bounce. Boy, did we get a bounce off of there. right to the all-time highs. Now, where do we go ahead here? We have a very positive bias historically in the week ahead. There's a good chance that we could see stock prices continue to push hard to make new all-time highs before the end of the year. That's going to potentially create some tough times for mortgage bonds and higher yields in treasuries. There's something that you need to watch very carefully on the Treasury market side, and that's a yield right now 216. That's a yield of 222. This is an important marker because a move above 222 could really cause some difficulty and could cause some problems. So it's at 216 now. Above 222, yes, we have a couple of ceilings here that could be good, but if there's some upward momentum in stock prices causing bonds to sell off and yields to move higher, you could see yields really push up here above these levels. Now we get to this 227 level, we're going to 240, pretty much in a straight line. So watch that carefully this week, especially with stocks having a very upward bias and with the low amount of volume, because trading desks, people are going to be taking vacation, taking times off. That leaves the market more prone to exacerbated moves up or down. So we'll be watching this carefully during the week. You need to be on board with us. I hope you have a great week and a great holiday. We will talk to you next week on Master the Markets. Bye-bye.
Master the Markets airs every Monday at 11 a.m. Eastern Time and can be viewed on MortgageNewsNetwork.com.
There are many information tools for mortgage originators, but MBS Highway is a communication tool. We empower you to relay information every day to your clients and referral partners. MBS Highway will provide you with specific real estate data for your marketplace, as well as daily sales coaching on the markets, and most importantly, how to translate that information into more transactions. Barry Habib's MBS Highway will give you an enormous edge over your competition. You will more easily win the trust and respect of your clients, and you'll become the go-to resource in your area for market intelligence. And yes, we will protect you from adverse repricing. For an exclusive Mortgage News Network offer and to receive information like this every day, go to www.mbshighway.com/MNN.
This is Mortgage News Network.